Aussie Swiss, okay. So similar to Aussie CAD, looking for it to break this little zone here. This is our monthly range, roughly 575 level here. A little bit high, but this is September 1st here. So this is kind of my main level of resistance slash, the beginning of the month, and essentially hopefully the high of the month. If this is the high of the month, price usually moves about 250 pips, then 55 level even down here is kind of that's our target based on monthly range. So so far price has, since it opened this month, it's come down, big bearish candle here, then it's pulled up a little bit to end the week, and then you can see, but heavy wicks to the upside here, and it actually created a zone similar to this. You can see price resistance broke, and then function as support here with this candle, and then this candle, and then a big bearish candle through the zone, and you can see it rejected this area 3 times now, and the body of the candles got smaller and smaller, so that's telling me it does want to break down again. Price is below the 4-hour moving average, so, and you can see with this structure here, it has created higher highs, higher lows temporarily, so, but it's still below the 4-hour moving average, so I would say this is actually really good to short soon. All I would need to see, and I mean technically we kind of may have already seen it, so you can see you got higher highs, higher lows here, and then with this little segment of price here, you had a big bearish engulfing candle back here, which took it out of this zone, and then as it came back in, you can see heavy wicks, and then it actually created a liquidity zone right here, which was below this one here. So originally this one, it's hard to see because these wicks are small, but there was a liquidity zone here, and then this one, and then after price came down, came back up, it created a new one quite a bit lower and quite a bit more significant. You can see with these heavy wicks and how much thicker this zone is. So, and then price came basically out of this zone again, as with this bearish candle here, so bearish engulfing candle. So I do think that this might actually be good to sell like now, to be honest, but I would probably just wait for price to break and create more lower lows and lower highs first. So like looking at this, it hasn't created them, it hasn't really set up the structure yet. It's gonna have to break this little area here, so, and this wick is pretty big, but we'll probably just do something like this. I would say if it breaks this, you're probably good to go. And then yeah, prices it actually retested this 1-hour moving average multiple times with all these candles. These are very weak candles, so it's a pretty good sign, guys. I think I might short this as soon as the market opens, pretty much. Let price break this zone. I'll set an alert here, and then yeah, I think this one's good to go, to be honest. But yeah, we'll just make sure we'll let price break that, and then depending on our entry, it might be a really good entry with high risk high reward to risk. Break this. Let me just draw this out so we know kind of what we're looking at. This is going to be a very good risk to reward, probably almost double digits. Actually, it might even be more. So basically just waiting for this little mini zone to break. I'll delete this for now, and then yeah, so this is kind of what we're looking at, guys. Like if price breaks this little area here, this this 56.87 area kind of, then we're good to go. So I just need something like this. I love these Swiss pairs. They're very consistent. So you got these nice wicks here. So now we just need price to come down, break this zone a bit, and then retest it of some kind, something like this, and then you have your entry, and you probably get, you'll be able to cinch your what I would do to make this really probable, what I will do to make this really probable is I'll let this play out, and then I will cinch this stop above the most previous liquidity area. So let's say like right now it's this one, so if price doesn't break above this area, then this is the new high liquidity area. So I would just set my stop just above this area. It might create a new one lower, and then I would just set my stop above that one, but so far we just have this one. So if price breaks down, and then I have I would probably just put it right to the top here. So if price comes down now and breaks this level here, retests, and then I enter, I'd keep my stop right exactly like this. It'd be something just like this, and then because then I have this liquidity area that price broke down with this, you can see, and then so that protects me, and then also I have this previous one up here, so that's where I would set my stop. And then so odds are if price did come, let's say, delete this for now, let's say price came, it came down, broke this level, then it retests, right? So it's retesting, and let's say it gets to here and I enter, and all of a sudden price shoots up, right? It gets bought up a bit more than I thought, and now it hits this zone. And then I have this zone as protection, this liquidity zone protection here, and then all of a sudden price breaks down. All right, so it does exactly what I wanted it to do, but instead it does it up here instead of here where I entered. So it's a good thing I have this zone here. And then you also have the 1 hour moving average to protect you as well. So as price moves down, this moving average will stay above it, and then so it might if price might come, let's say it comes down, oops, delete this. So let's say price comes down here, then comes back up, you'll have this moving average right here, this blue line, to protect you as well. So it'll function as resistance to the upside and then help price make its way down. So hopefully that makes sense to you guys. Hopefully I explained that pretty well. And then yeah, this is gonna be a massive trade, so hopefully you guys get in on this. I'll keep you updated. Just let me know what you want to see in the comments, and I'll see you in the next one.